Did you know that over 40% of the stock market's total returns come from dividends? That's right. While most people chase stock prices, savvy investors know the real secret to building wealth while you sleep is dividend investing. Imagine waking up each morning knowing your investments paid you overnight without lifting a finger. That's the power of dividend stocks, and today I'll show you exactly how to invest in them the right way. But first, a quick heads up, this is for educational purposes only, not financial advice. Any companies, apps, or strategies mentioned aren't endorsements. Always consult a certified financial professional for guidance tailored to you. Now let's get into it. What are dividend stocks and why should you care? Dividend stocks are shares of companies that pay out a portion of their profits to investors, usually every quarter. Think of it like this. If you owned a rental property, you'd collect rent every month. Dividend stocks are like rental properties, but instead of dealing with tenants, your money works for you in the stock market. And here's the kicker. You can reinvest those dividends to buy even more shares, compounding your returns over time. That's how legendary investors like Warren Buffett built their fortunes. Step 1. Choose the right dividend stocks. Not all dividend stocks are worth your money. Some pay high dividends today, but cut them tomorrow when the economy shifts. To avoid this, focus on companies with consistent dividend growth. Look for companies that have increased dividends for 10+ years. The dividend aristocrats, S&P 500 stocks that have raised dividends for 25+ years, are a great place to start. Sustainable payout ratio. A payout ratio under 60% means the company isn't overextending itself. If a company is paying more in dividends than it earns, that's a red flag. Strong financials. Look for low debt, strong cash flow, and a competitive edge. If a company is struggling, it won't be able to pay dividends long term. Want a real-world example? Let's take Coca-Cola, KO. It has paid dividends since 1920 and has increased them for over 60 consecutive years, even during recessions. That's the kind of stability you want. Step 2. Build a dividend portfolio. Now that you know what to look for, how do you put together a portfolio? Here's a simple blueprint. Diversify across sectors. Don't put everything into one industry. A balanced portfolio might include dividend-paying stocks from healthcare, consumer goods, technology, and utilities. Balance yield and growth. High dividend yields, above 6 to 8%, can be risky, while low yields, 1 to 2%, might not grow fast enough. A sweet spot? 3 to 5% yield with consistent growth. Use dividend ETFs. If picking individual stocks feels overwhelming, consider dividend ETFs like VYM, Vanguard High Dividend Yield ETF, or SCHD, Schwab US Dividend Equity ETF. These automatically diversify your holdings while paying you dividends. Step 3. Reinvest and compound your returns. Here's where the real magic happens. Reinvesting dividends. Instead of taking cash payouts, you can use them to buy more shares automatically, accelerating your wealth. This strategy is called Dividend Reinvestment Plan, DRIP, and over time it turns a small investment into a fortune. Let's break it down with a simple example. If you invest $10,000 in dividend stocks with a 4% yield and reinvest dividends, you'd have over $48,000 in 30 years without adding another penny. But if you add just $500 a month, that jumps to over $450,000. That's the power of compounding dividends. Step 4. Optimize for taxes and passive income. Here's a critical part most people overlook: taxes. Use tax-advantaged accounts. Holding dividend stocks in an IRA or Roth IRA can shield your gains from taxes. In a taxable account, qualified dividends are taxed at 15 to 20%, but in a Roth IRA, they grow completely tax-free. Plan for passive income. If you want to live off dividends, calculate your financial freedom number. For example, if you need $40,000 a year and your dividend stocks yield 4%, you'd need $1,000 invested. It sounds like a lot, but with consistent investing and compounding, it's absolutely possible. Final thoughts. Start today. Reap the rewards for life. The biggest mistake? Waiting. Every day you don't invest, you're missing out on potential compounding. Even if you start small, taking action now can set you up for financial freedom later. If this breakdown helped, you'll love what's coming next. Click on the next video to dive deeper into building your ultimate passive income portfolio.